Welcome back to another installment. This one is going to be about the second source of income. The second source of income, of course, I'm talking about stocks. Now, a lot of people see stocks as an investment, and it is, but it's also possibly another source of income. With a stock certificate, you could get something that is called dividends. Dividends is when the company pays you just for holding the stocks. For example, a company will hold um, a reservoir or it will hold, I guess, excess profits, and instead of dishing it back into the company, investing it back into the company, they will pay their shareholders in the form of a dividend. If you take a look at this next drawing here, basically this will give you an idea of how dividends work as a source of income. So here's the company. You can see the arrow pointing towards the building that I drew. I'm not the best drawer. I'm not the best artist, of course. I'm not an artist. I'm a businessman. So this is what we got. So take a look at the building here. You can see that there's an arrow coming from the building itself, which would be the business, and what's coming out is called profits. And like I was saying, profits could be used in a company to, I guess ramp up business or scale up business or, invest in the business itself. That's what they could use the profits for. They reinvest their profits into the business so that there could be business growth. Once a business usually gets rather large, or they've scaled up enough that is acceptable for them at the time, they will then take those profits and put those towards dividends. And so you can see in the drawing here, there's an arrow coming away from the building, the business, and that is profits, and it goes to the stock certificate. So if you ever hear people or businesses offer dividends, they don't say it's going to this person, that person, this person. They don't name the person themselves. What they say instead is you get this amount per share. So the profits actually goes to the share, and the shareholders, the holders of those stock certificates, get the benefits. So it's pretty much the more stock certificates or the more shares you own, the more dividends you will have or you will get on a per share basis.